Hello, welcome to the weekly technical analysis review here at XM.com. I'm Rafi Boyajan, currency analyst, and today is Monday, July the 10th, 2017. Today we will look at the dollar yen, the euro dollar, the pound dollar, and the dollar loonie pairs. So let's start with the dollar yen pair. Here in the 4-hour chart, we can see that dollar yen is looking rather bullish. RSI is just at the 70 overbought levels, suggesting that it could actually go either way, as it still hasn't truly crossed into 70, so it could potentially go further up, or it could reverse lower. At the moment, it is currently prices are currently hovering around the 161.8% Fibonacci retracement level of the down leg from 113.68 to 112.88. If we do see further upside gains, we should see the 261.8 Fibonacci level coming into scope, which also happens to be the 115 handle. Below that, should we see a downside reversal, we do have the Tenkan Sen line at just below the 114 level, while the early July peak of 113.68 around the 113.70 level could potentially act as support, and also below that we've got the 113.35 level, which is the 61.8 Fibonacci level. That's also another potential key support area. Looking at the daily chart, it is looking, the outlook does look a bit more neutral, although even here the RSI we can see has actually crossed into oversold levels, suggesting that prices might struggle to get past the May peak of 114.36. If we do see a break above that level, the 115 handle would be the next key resistance area, followed by the December 2016 high of 118.66. And to the downside, again, we have the 113 handle as another potential support area, and below that, the 111.80 level, just below 112, looks like a very important support area, as it's the bottom of the Ichimoku cloud, and is also where the 50-day moving average is converging. Let's move on now to the euro-dollar pair. Euro-dollar in the 4-hour chart is still mostly bullish. The MACD, although we can see a weakening of the momentum, it is in positive territory still. Prices at the moment are hovering below the 61.8% Fibonacci retracement of the down leg from 1.1445 to 1.1312. If we do see further losses, at the moment, actually, there is support coming from the 50 moving average at 1.1385. A break below that would bring into scope the 50% Fibonacci at 1.1380, followed by the 1.3060 level, which is the 38.2% Fibonacci level. Above that, we do have the 78.6% Fibonacci level of 1.1415, followed by the late June high of 1.1445. And above that June peak, which was a 1-year high, the next resistance should come from around the 1.1525 level, which is the 161.8% Fibonacci level of that June to July down leg. Looking at the daily chart, the euro-dollar is looking much more decisively bullish. We can see the signal line is still trending up, and the MACD is much more strongly in positive territory, although we can see it has leveled off in recent days. And also prices have been trending within the linear regression channel since late March. At the moment, prices are just below the middle of the linear regression. Should we see an upside, more upside gains, resistance should come from the top of the channel at 1.1620. That also happens to be not too far from the May 2016 high of 1.1616. After that, the next key resistance would come from the August 2015 high of 1.1713. To the downside, the major support should come from the 1.1260 area. Moving on now to the pound-dollar pairs, we can see that the short-term momentum has weakened for the pound since early June, and RSI at the moment is rather flat below 50. Prices are trading below the 50 moving average. There is support at the moment coming from the 38.2% Fibonacci level of the up leg from 1.2588 to 1.3029. Further losses would see the 200 moving average at 1.2835 coming into scope, followed by the 50% Fibonacci, which is just above the 1.28 handle. On the upside, we have the 23.6% Fibonacci level at 1.2925, followed by the 50 moving average at 1.2940. And we also have a very key resistance area at 1.2975, which has repeatedly acted as a resistance level, so that could be a potential barrier before prices were to challenge the June peak of 1.3029. Looking at the medium-term outlook for cable, it is looking a bit more neutral, perhaps slightly positive, neutral to positive. At the moment, we can see prices trading around the 61.8% Fibonacci level of the down leg from 1.3047 to 1.2588. The MACD has actually turned positive in recent days. If we do see a strengthening of that positive momentum, we should see cable targeting 1.2950, which is the 78.6% Fibonacci level, before it reaches the May peak of 1.3047, followed by the 161.8 Fibonacci of 1.3330. And to the downside, we have the 50% Fibonacci at 1.2810, followed by the 38.2% Fibonacci at 1.2760. Let's now have a look at the USDCAD, which actually touched the 10-month low 1.2859, and it's currently trading just above those lows. We do have a major resistance area at the moment in the 4-hour chart coming around the 1.2930 level. A break above that would see the 1.2975 level coming into scope. That's also the 50 moving average, followed by the 1.30 handle. But if we do see a continuation of the downslide, we should see support coming from the 1.2840 level. We can see RSI did manage to recover earlier today, though it has now started to drop back again a little bit. So it's the short-term bias for USDCAD is looking very bearish. Also on the daily chart, it's also very bearish as well. We can see that sharp decline since May, when it had peaked at 1.3793, and since dropping below the key support level of 1.30, we can see that the next support level should come at 1.2840, followed by another previous support level of 1.2740. And RSI on the daily chart has actually entered oversold territory, so this could suggest that the sell-off is potentially overdone. We could see perhaps a reversal, and if we do see a near-term reversal, the major resistance area should come around the 1.30 handle. That's it from me. Thank you very much for watching, and have a great day.